just today prior to the 15th of August, where we will be, of course, celebrating Independence Day, the 78th Independence Day, and it's a significant milestone, of course, in our history. That being said, that's the Nifty implied open. It's an indication of a pretty quiet start and just taking off from the kind of handover that we've got from Wall Street. All the three major averages actually above their August 2nd closing level, which was actually the day before. We had that major sell-off on the 5th of August. So it seems to be related to some unwind trades. But what the market or investors are really going to focus on now will be the kind of CPI print that is going to come out, whether or not that is actually going to encourage investors, because do remember they have been fairly concerned by the recent US labor market softening. That being said, the July PPI stands at about 2.2%, a little bit below street estimates. You've got the Asian markets this morning as well, pretty much in the green, barring Hong Kong and Shanghai. And stock specific, it's Starbucks, which has been rather active on account of the new CEO appointment. Crude oil prices continue to rise on the back of the sharp US stock draw. And comments coming in from the Fed, Nikunj, that rate cuts are on the anvil.
Again, I go back to that same point, what we said, that let's say when that stormy sell-off happened, the view of the world was recession is around the corner. That triggered this entire sell-off, which in a sense then got multiplied because of what happened with yen carry trade. None of those factors are at play. There is no recession talk. In fact, markets are now talking about a rate cut, and then the yen carry trade pressure clearly seems to be unwinding. Most of the major markets or markets which really matter, from the levels where the sell-off happened or the levels before the sell-off happened, they've retraced quite a bit. So mathematically, they've retraced more than 50-60% depending on the market you're looking at. So that clearly means from a global standpoint, things are looking better. One cannot just look at Indian markets in isolation, because the undercurrent from global markets are also very strong, and the undercurrent in the global market, which in a sense was looking slightly shaky, there was a risk-off moment, whether it is Nasdaq or whether it was Nikkei. Clearly that storm has come and gone. Now markets are talking about rate cut. Now markets are focusing on commodity drop, even though the leadership globally seems to be shaking a bit in terms of the themes and outlook. But one would say that from a scary sell-off versus where we are right now, I think this market has delightfully surprised everybody.
Yeah, delightfully surprised everyone, and as Nikunj was pointing out, in fact, US markets are above the mark that we saw on August 2nd. So they saw a sharp dip, but from there they pretty much retraced all the losses that they had made. But back home, it was a weak day yesterday, and the Nifty slipped below the mark of 24,150. It was heavyweights from the banking index, the likes of HDFC Bank, SBI, etc., which were under pressure. Tata Motor was on the back foot. Hero MotoCorp went weak into the earnings, and understandably so. So it was down almost 1.5% in the trading session. And of course, the frontline index had an impact on the broader markets as well. So there wasn't big outperformance yesterday. Even the mid cap and the small cap indices weighed under pressure, so they were down almost 1% each. FIIs have turned net shorts after 38 sessions, so that's an interesting point as to how the positioning of the market is so light right now. DIIs, they have been buying for 8 consecutive sessions, so no surprise there. And the FIIs continued to sell yesterday as well. They sold almost 2,000 crores. But I think it's time now that we stop discussing FII sell figure with that much credibility, Nikunj, because of course it is DIIs which have been running the market. Yesterday was a weak day, maybe just a bit of nervousness, I guess.
So Anisha, mathematically, if you add the numbers, which is that what is the DI selling versus what is the FII buying, I think the numbers are matching. And numbers are exactly matching in terms of what the DI buying is and what the FI selling is. The difference is that what DIs are buying is not exactly what FIs are selling, which is that one really looks at where the DI flows off late are moving versus where the FI selling is. There is a difference. For example, HDFC Bank. So FIs are selling, but DIs are not exactly buying HDFC Bank. They are buying, some other stocks. There are a lot of PSU stocks which DIs are buying, and FIs don't own them. So it's not that what FIs are selling is getting absorbed by DIs. I think there's a pattern here. Pattern is that mathematically there is no large outflow which is happening, but couple of block deals, couple of promoter blocks, new QIPs, new IPOs, all that has started. So it is not that FIs are selling and DIs are completely buying. So it's good to see that there is no imbalance in the market and the net liquidity flow is strong. But in terms of the theme and in terms of what you see the assortment, I think the assortment clearly started. Let me establish that, how things are changing here. And what is the leadership sector of this market? The leadership sector of this market is PSUs. And who would have thought that the heroes or the real horsemen of this bull market, which is the defense stocks or perhaps some of the engineering stocks, they are off by 15 to 20% from the recent high. Look at Hutco down 20%, HAL down 17%, BHEL down 14%, NBCC down 13%. So that is the subtleness of this market, which is that in a lot of PSU stocks, a correction has started. B, look at the screen, and if you look at the profile of stocks which are from 52-week high, what is coming up again? Pharma surely is coming up again. You got INOC, so you got, for example, Cipla, Glenmark, Ajanta, Fortis, they are making a comeback. You got select banks which are making a comeback. So that is where you need to focus on, that PSUs are now hitting what could be called as a pause phase. Pharma, which is a defensive sector, that is showing characteristics of leadership right now. And then you got some odd ones out depending on the company you're talking about, like a Trent or a Federal Bank. But in general, the point I'm trying to make here is that PSUs selectively are showing signs of topping out.
Okay, yes indeed, some of those PSUs showing signs of topping, a bit selective given that we're just marking some of the stocks that made it to the 52-week high or are at life highs, and part of that list includes an ONGC, but it seems to be a lone soldier within that basket because the rest of the stocks you have a mix of names, sugar as well as pharma, selective auto as well. So take a look at Fortis, Ajanta Pharma, Torrent Pharma that make it to the list. Along with that, you've also got Aurobindo. So pharma, safe to say, along with Glenmark and Cipla have been at the forefront, as well as the likes of Balrampur Chini and Inox Wind. But that aside, it is going to be critical to monitor some other data, not really market moving, but nonetheless something that we'll keep an eye out on. You have the US core inflation rate and the CPI data that's going to come out, as well as the WPI inflation back home and some other housing stats, etc., that will be closely watched out for. So Nikunj, globally as well as back home, we started off the week by saying nothing's really going to be market moving in terms of this data.
See, it's a holiday tomorrow. And then when we come back on Friday, a lot of data in the sense is anticipated from the global market. The data which really matters, which comes out today, and we will react to that data point on Friday. Global markets will react to that data point today, is the US CPI data. Whether it's a rate cut or whether it is the fear of recession, the inflation data or the CPI data, I think is of far greater importance. Then you got the WPI, then you got the retail data in terms of US. So there is a lot of data which in a sense is coming from US market, which is going to be crucial and which would set the tone in which way where those macro data points would move. So I think it would be interesting that next how global markets really deal with so much of data which will come, and B, what essentially would be the reaction to Indian markets when we come back after a day holiday. I don't think anything scary should happen, but yes, in terms of a data point, because the sell-off which happened 2 weeks ago, 10 days ago was more like a macro-driven sell-off. So in that context, I think these data points are important.
If you like this video, then like, share and subscribe to ET Now.